Cool. Good morning, everybody. It's the 13th of January. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning.
How you doing?
Yeah, very well, thank you. Top of the
Good.
morning to you all.
Excellent. We're a little bit behind today because we had a few bits going on at our end, but yeah, a decent-ish couple of days in the stock markets. Certainly been some things to update on from an FX perspective. I guess there's a few bits to discuss on your side of things as well, Steve. But let's just get first of all through some of the headlines. So yesterday we had the all-important CPI number out of the US, and inflation is now up around about 7%. The Federal Reserve Governor Brainard said tackling inflation and getting it back down to 2%, which is the target, while sustaining an inclusive recovery in the US is the central bank's most pressing task. Inflation is too high, clearly we know that, and in remarks prepared for the confirmation hearing before the Senate committee yesterday, it confirmed that Brainard will be Jerome Powell's closest team member on monetary policy and strategy. So her words will be, more and more influential going forward. In terms of what's going on in the UK, Boris faced the PMQs yesterday, Prime Minister's questions, and bought himself a little bit of breathing space. I don't know if anybody watched it. It was a little bit squirmy and cringy, but he apologised for basically admitting that he was at one of the Downing Street parties, saying he was only there for 25 minutes and that he wants Sue Gray, who is leading the investigation into this, to come back with her findings before any further action is taken. But it seems as though confidence in his leadership is dwindling at a pretty astonishing rate. So we'll see what happens with that over the coming days. Bitcoin slightly lower yesterday, climbed above 44,000, however, for the first time in a week, as appears to be acting as a little bit of an inflation hedge, which is quite interesting. Obviously, we'll come onto the charts with that shortly. There are an abundance of Fed speakers determining to pronounce on how many hikes we will get this year. So that may influence what we see in the market over the next few days or so. But I think that's probably a nice opportunity for us to dive into the charts. Steve, any asset classes that are particularly taking your interest today, or should I maybe kick off with FX?
I can dive straight in. Just on a couple of those stories, Joe. I'm thinking, one, you said the Downing Street party, and it wasn't a party.
Sorry, it was a work event.
He didn't realise it was a party, and
Yeah.
you should know that because he just texted me and said, "Could you get your host speaker to correct his terminology?" So
Yeah.
he went into the Downing Street Garden, and there was like a works event going on, which people couldn't do from home, because obviously they didn't have any alcohol at home.
No.
And also inflation 7%. Wow, what an amazing number! And I'm sure if they did post a real number, there'd be people a lot more worried. And what the Fed are going to do about it, God only knows. Interest rates, I really don't think are going to make much of a difference unless you move them to levels that would collapse the economy. So, yeah, just one of those things that we've got to deal with. I can't remember the third story that you sort of mentioned, but there was, Bitcoin. Yeah, for me, sort of like we saw indications of this the other day, and we sort of like talked about it. So I'll just share my screen. Sorry about that. So quickly, briefly, longer term chart, weekly chart, we're still bearish on Bitcoin. Really has to clear the 52,000, 53,000 level. Has to go up. The price has to get above that for us to not be as bearish. This is a bearish formation, but we can see that we've bounced off some support at 39,500. Look at the daily chart, and it gives you a little bit more of what we were looking at last week when we were getting to these levels. And we had two trend lines, two upward supporting trend lines. We broke one of them on the 5th of Jan, and that led to the move lower to the tentative. Well, I mean, we've got a couple of touch points here, a third touch point there, so that makes it a trend line, 3 touch points. We did see price action break below it, but it only just got below this previous swing low in September. And then the market rallied within the same day, and this was a clear rejection of the downside, the short-term downside potential. And then we started seeing momentum on the downside wane. We've got a MACD crossover taking place today. So we did sort of pick up a few of these points. We posted a few trade ideas of buying, and we sort of like triggered them really well on the trading view side of things. So that worked out really well. So yeah, there is an uplift happening at the moment, and it's quite an aggressive one. Down slightly on the day, but only just. If we look at the 4-hour chart, we still have a little bit of work to do to get through this Ichimoku cloud resistance, and then the next level to test would be around about 45,800 to 46,000. That feels like we're going there. Let me just put a little old fib retracement. I mean, amazing how these levels work without you even realizing. 38.2% fib retracement, so a very technical level, which is normal in corrections, came in at 44,350. The high was 44,337, so not far away from that fib retracement. The next one would be around about 61.8. We also do have, there is a 50% one that sometimes works pretty well, and yeah, as I thought, that would come in around about those swing lows, which was acted as really decent support when we were up higher, and now should provide decent resistance when we try to get back above. So for me, heading towards probably 45.5 to 46,000 in Bitcoin. Looking at commodities, interesting. Yesterday, did a little gun-to-head trade on this. This uptrend did continue. Again, the weekly chart, potentially, we thought posting a head and shoulders type formation, but it's very early on. The neckline is way down here at $62, $63, so I don't think we're going to see that for a long while. And we seem to have pushed above the 78.6% fib. So for me, that's indicating that there's a good potential for a further extension higher towards the multi-year high around $85. And then the questions will be asked whether this can continue or not. The impulsive move higher really feels this has only been a one-legged correction so far. So I still believe there is potential for a further correction to the downside, but market forces are moving that higher at the moment. So I wouldn't get too wrapped up in it. This is my gun-to-head trade yesterday, which at one point looked really, really hot and just cooled off before the close. On the gold side of things, interesting going on in here. Again, long term, I'm positive on this. We're in a corrective phase, and that's playing out at the moment. There is resistance up at 1850 on this tentative downward trending resistance line. There's only 2 points on there, so it's not a full trend line at the moment. Be aware of that. But yeah, the price action seems to be when it gets above 1800, it looks to retest this 1834 level, which it's done on a number of occasions. Broke up between the 10th and the 22nd of November, but reversed very sharply after stalling at 1875. Yeah, it looks we're on the back foot at the moment in the few hours of trade this morning. And yesterday's candle is a bit of a hanging man candle, so a little bit of a concern for the longs. We see a nice little reversal, price action stalling here over the last 12 hours and reversing rather sharply. If we do manage to get down below 1815, I think that may be a sign that we've just posted a new lower high, and price action to the downside could resume. So maybe one to watch for the gun to head, selling around here, having a tight stop at 1828 or a better stop above the 1834 level. Looking at indices, yeah, a decent performance yesterday, although it tailed off towards the close. We managed to post a really nice high, levels that we haven't seen since January 2020. Is that right in the DAX? Wow. Sorry, FTSE. Is that right?
Yeah, that would be right. Yeah.
Yeah. So pretty decent indeed. Yeah. 24th of January, week of 24th of January 2020. So obviously FTSE is very much driven by the commodity, the oil stocks, and the bank sector. So they're all performing pretty well at the moment, and no real signs of this slowing down. Although, saying that, you can always find signs depending on where you look. So momentum overall, as this rally has happened, momentum is pretty much it's stalling slightly now. So we're seeing this extension here, and we're seeing momentum stalling, upside positive momentum stalling. So that's an indication of bearish divergence, but I wouldn't just trade off the back of that. There's obviously opportunity for a small reversal, could get a crossover here. But really, everything else at the moment pointing higher on FTSE. DAX had a run to the upside on the 5th of Jan. We got up to 16,288, which was just below the all-time high at 16,300. We had the sell-off, the corrective sell-off, and yesterday's price action formed a doji candle. So that's a sign of indecision. So does that indecision mean that this upward momentum that we saw has come to an end? It looks like it from the MACD perspective. We're going to get a crossover here on the MACD with further downside occurring today. So that would be negative, and maybe we could see after this impulsive move up, although it's only a short term, it's actually probably more of it's not really an impulsive move, is it? It's more of a corrective phase, potentially setting up a double top, but then we would be in a lot of trouble if that double top does get confirmed. That's down at 14,900. So yeah, slightly negative on this side of things. Momentum really stalling. Potential to look for that sort of like reversal in this indice rally that we've seen this week. Similar sort of formation posted yesterday in Dow. Signs of indecision with this doji, although the body's a little bit fatter than you'd like it to be. A little bit better recovery in NASDAQ, shall we say. We've seen this morning star reversal formation, the sell-off, the bullish hammer, and the correction, which has taken out the losses, and that's had an extended move higher. We got up to just above 16,000, nice round level. Now trading at 15,888. So shorter term chart potentially found resistance at this Ichimoku cloud, posted a hanging man candle here and reversed, really looking for a break of 15,776 to sort of put an end to this this correction that we've had. But the real level that I like to look at the moment on NASDAQ is around about the 15,500. That for me, that's quite pivotal, although we did see that dive through it this week and the correction higher when the Fed came in to save the day, I suppose. Same sort of price action in the S&P, that hanging man type candle structure. Ichimoku cloud offering a good level of resistance there, and really need to see a move back below 4,700 to be concerned. If we don't get that, we'll hopefully see that gentle push higher for the rest of the day. Pretty much it. Just the China 50 broken through support, and remember we're still not really, still haven't sort of like pulled far enough away from this 14,500 level for me. It still feels like that negative sentiment will prevail eventually. It's just a matter of timing. But China under pressure again this morning. Yeah, that's about it from my side. Joe, how's the FX looking?
Yeah, quite interesting actually. We've seen a pretty strong move in the dollar index yesterday. So on the back of the inflation numbers from the US, we saw the dollar take a bit of a tumble. So prior to yesterday, it had been trading in this kind of consolidation phase here, but within this bullish channel. But yesterday we saw that break down quite considerably with a very impulsive move to the downside, and actually saw a close on the daily chart outside of this bullish channel. So that is a little bit of a concern, I think, for the sort of more medium term view on the dollar index. But if we do scroll a little bit further out, then you can see we've got this prominent blue line, which is relevant because it's this previous high from back here in September. It's also the kind of point where we saw the breakout from this kind of double bottom pattern. So in fact, what we're seeing now is actually a retest of this double bottom pattern that confirmed back here in November. The fact that we've broken below the channel, may mean that we trigger a little bit more of a corrective move to the downside, but I do believe there could be some support coming in around here. We've also got this 38.2% fib level at 94.47, which may act as a support. So we could be maybe about to see this band of support here do a job on the dollar index. So quite a strong move anyway, and obviously that's going to have an impact on euro US dollar. This had been trading in some sort of consolidation, or I touted the idea it may be forming an ending wedge, which maybe it has, with that really strong move to the upside yesterday, clearing this previous resistance here at 113.83. Really nice move to the upside, also taking out this downtrend resistance line. Obviously we are above it at the moment. There is a fair amount of time left in the session today, so if we can stay above that level on a closing basis come 10 p.m. UK time tonight, then that may add a little bit more validity to the break of the trend. Above that, we've got resistance at 115.25. So any continuation of this correction higher, I think, could potentially get to that level. But then I'd be interested to see, what sort of reaction we get from the bears when it comes to euro US dollar, because obviously this has been trading in a pretty persistent downtrend for some time. We have seen a little bit of consolidation here, or maybe some sort of rounding formation, which may mean that we are going to see a little bit of strength from this in the short term, but we need a little bit more confirmation, I think, at the moment. Maybe some sort of pullback to retest this previous high, which should now act as support potentially around about 113.85. So quite interesting, maybe potential for a little bit of a turnaround. Looking at some of the other riskier assets, Aussie US dollar, commodities obviously very much linked to the performance of this pair. I like this because it was forming maybe a larger head and shoulders top pattern. Not entirely sure about that now, so I'm just going to remove that for the time being. What I was interested in seeing here was this breakdown of this kind of consolidation, maybe a flag formation, this being the flag pole, this being the flag. We saw a breakdown here, but we've got above these highs from the end of December. So that kind of invalidates that as a theory, to be totally honest. So probably going to have to do a redraw of that on the charts. By taking out that resistance there, obviously there's a lot of fresh air for this to move into on the upside. We do have some downtrend resistance which may line up in line with this red line here. But above that, the next kind of resistance we're looking for is up there at 75.55. We could also maybe draw on some fib levels from that high down to that low. So we've got a 61.8% fib level there at 73.40, and above that at 74.35 we've got a 78.6, which may roughly line up with this downtrend resistance line. So worth keeping an eye on that. If we take a look at cable, obviously, given that we saw the weakness in the US dollar yesterday, we've seen a continuation of strength here. Sterling really, quite bullish at the moment. Really sharp move to the upside, as you can see on the daily chart. Really quite simply taking out that downtrend resistance lines that hasn't done anything to repel the price action, and we continue to see this move higher. In terms of the next levels to target, we've got a level in red there at 138.91. I think we can maybe highlight this as a level as well, which is at 138.33. So looks to be in good form at the moment, but given the severity and the sharpness of the move to the upside, I would question how much sustainability that has got in the very short term. Quite interestingly, I've just drawn the fib levels on from this high here in June last year to these lows that we posted in early December. We've got a 61.8% fib level, which lines up with these previous highs here. So that may be a little bit of a test for the pair in the short term to keep an eye on. And if it continues, without really any pullbacks into that level, then I'd be probably even more interested in that, given that it is probably due a little bit of cooling off at some stage. Dollar yen, that has pulled back to this support level at 114.36, but not really an awful lot going on there. Overall, still looks pretty bullish, so I wouldn't be looking to bet against that for any length of time on the downside. And well, should we finish off on euro sterling? Not really much to report on there, still trading below this bearish channel. Not really much going on in terms of volatility on this particular pair, but ultimately still looking for a test of this 82.75-ish level over the coming days and weeks. So that's it from me on the FX side. Let's take a look at the gun to the head trades from yesterday. As Steve mentioned, he had a decent call on oil. He went long. He made 94 ticks or 1.24R. I was stopped out on Aussie US dollar, given that we saw quite a substantial amount of dollar weakness. So that didn't help my cause. But collectively, as a team, we made a little bit yesterday, which is good. So hopefully we can continue from where we left off yesterday and make a few R today. Anything you fancy, Steve?
Yeah, I've just fancy fading this indice rally. It hasn't. It had an opportunity yesterday, I think, especially the Nasdaq getting above this 16,000 level. I thought that was the opportunity to really kick on, and it seems to have sort of like ground to a halt. So I'm thinking we could see a potential reversal now that it hasn't managed to push higher. So I'm going to go with selling Nasdaq. Now there's two. I mean, really, the stop should be above this 16,000. What was the price it got up to? 16,020. My target would be a full retracement of this move. So, I mean, that's pretty much, I'm quite happy with that, sort of like leaving it like that. I could be a little bit more aggressive and bring the stop down to that sort of level and then have a 12.87 to 1 risk reward. But that's a bit ridiculous. Yeah, so 15,880 trading now, getting short there. Right, don't get too silly on it, Steve, yeah? Yeah, I'll put the stop at 15,878, 16,828. Oh, just above that swing high. So, and that gives me a good opportunity to round my numbers up. You know how I love to round numbers up. So 4 to 1 risk reward on that trade idea today. Really looking for that reversal. I'm going to do that myself, I think.
Oh, nice. Putting money where your mouth is. Like it. Okay. Thanks, Steve. Good luck with that. I'm going to take a look at Bitcoin, I think, today. I really struggled to find anything that interested me at all, to be honest. But looking at this on the daily chart, I could, make a case for it having a little bit more upside in the short term. So this is the daily chart on Bitcoin. Clearly, we found some support at this just below 40,000 on Bitcoin, a previous swing low from here in September. Nice kind of reversal hammer candle formation, and we've seen a bit of follow through to the upside. Still looks as though it's in a bit of a downtrend in the very short term, but even up to this kind of 45,890 level, there's probably enough for me to work with on an intraday basis on Bitcoin today. So I'm going to buy at 43,782. Just looking at it on the hourly chart, I could maybe make a case for there being a bit of a rounding sort of bottom formation taking shape here. I'm going to have to be pretty aggressive with my stops and targets. So I'm going to target a move to 45,683. As you can see here, this is the hourly chart, and this blue line seems to have been a pretty important support level for a considerable amount of time. So now expecting that to act as a resistance potentially on the upside. So I'm going to buy it there with a stop just there at 43,176, looking for 3.6R on Bitcoin today.
Brilliant.
So hoping that there's a bit of consolidation here going on now, and it will continue to hold, and we can see a nice lift up into that resistance zone today.
Nice one.
Okay, so there's two trades from us both. In terms of what we can expect for the day ahead, at 1:30 UK time today, we have initial jobless claims in the US. We also have the latest PPI reading. Claims are expected to rise 215,000 from 207,000 a week previous, and the PPI number is expected to rise 0.4% month on month. So keep an eye out for those numbers today at 1:30. Anything further to add, Steve, or are we good to wrap this up?
Yeah, I think we're good to wrap it up.
Nice. Okay, well, have a great day, everybody, and we'll be back tomorrow morning.
Cheers.